Welcome to the Rebel Income Coaching session number 3. We're going to be talking about stock charts, pivots, and trends. Excuse me. We're going to spend some time talking about the tools that that are made available to you within the Traders Pro website, and give you an idea of how some of those tools are designed not only to help you find stocks that you can consider as good investing opportunities, how to build a watch list, and some basics on how to use the charts that are included in the Traders Pro software. We will also we'll be diving into some details about about understanding how pivots work and what pivots are, how they identify, help us identify levels of support and resistance, how we can use pivots to define trends over different periods of time, and also begin to recognize and look for signals that a trend may be about to reverse from upward, from bullish, for example, to bearish, or bearish to bullish. Let's go ahead and dive in. All right, let's start out here. The first thing that happens when you log into the Traders Pro website is that it will the Traders Pro homepage will take you to the 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 muscle scans that are included as part of your membership in the software. I've got a sample of this homepage right now. Let's go ahead and pull this up. This is the same scan based on today's closing price. Let me expand this window a little bit, and you can see that there's a lot of stocks that we can go through that are listed here. This is there's a number of different scans that are available to you. These are all built to identify stocks that fit different conditions and different criteria related to the way that price is building momentum in one direction or another, as well as what kind of signals are generating, or that we're seeing being generated from the Traders Pro software. You can find the criteria for each scan down at the bottom of its list. For example, here it says new buys will find stocks whose price is $1 or greater, had a hold rating on the previous day, and is now a buy rating. So these ratings they're generated by the Traders Pro software for you. So this is an example of one that is designed to try to identify stocks that are starting to build bullish momentum. It finds ranked stocks of 30 or greater. So they're starting to move up the rank lists, and average volume of 100,000 or greater, trying to identify stocks that have a lot of trading activity going on, so that you can have the opportunity to work with a fairly liquid market. Each tab has a different kind of scan. You can see there's several different tabs that are built here. Rather than identifying every single one of these, you can browse through them. I want to just highlight really quickly some of the scans that I think are a little bit more useful for the purposes of identifying stocks that might fit the criteria of the Rebel Income system. Now, there isn't one single scan, one single tab here that is built specific to every one of the criteria that are built into the Rebel Income system. So keep in mind that just because a stock comes up in one of these tabs, it does not automatically mean that it fits the system that we've built for Rebel Income, or the kinds of trades that you will see us highlight through the through the Rebel Income blog. But this can give you a good starting point for starting to do your own analysis for stocks that you think might fit as well. So there's a few different ones. Remember that Rebel Income is designed to try to identify stocks that may be trading at or near historical lows, to try to identify potential value-based opportunities. That means that a lot of these tabs, a lot of these scans, muscle stocks, smooth sailing, new buys, breakouts, spring loaded, excuse me, are built more around bullish momentum. So some of the scans that are more appropriate to Rebel Income are a little bit more a little bit more counterintuitive, a little bit more contrarian in nature. So, for example, the weaklings scan is interesting because this is a stock, or excuse me, this is a scan that is looking for stocks with a strength rank less than 50, and the rating signal has changed from hold to sell in the past day on an increase of volume of 20% over the previous day. These are stocks that may be picking up bearish momentum. The idea here is that if they're declining, then those downward trends may be extending themselves, looking for a level where they may begin to find some support and a basis to start recovering from is something that we can use to try to identify where some of these early opportunities are. Sell to buy is also interesting. This is a scan that looks for stocks with the first buy signal after a sell signal has been given. So the idea here is if a stock has been given a sell signal, it's probably been dropping for a little while. These are stocks not necessarily that have been in extended downward trends, but they have seen a reversal from bearish momentum to bullish momentum. And so sometimes there can be some interesting opportunities at the bottom of trends that you'll find here as well. Put sales. This is one that we've built to try to fit some of the criteria of the Rebel Income System. It says this is looking for this is looking for stocks that have a book value that is greater than the last price. Remember when we talked about book value in session 2, that we described book value as a reflection of a company's intrinsic value, the value that shareholders would receive if the company were to close its doors, liquidate all its assets, and distribute the remaining cash to shareholders. And so this is one where the stock price is less than that book value. It's also got a rank less than 80 or higher than 30, somewhere in that range, in between that range. Average volume 200,000 or higher. Market cap is 500 million or higher. So this is one where we may identify stocks that are following these downward trends that are beginning to might be beginning to find a level of consolidation that might work well for a potential put sell. The top dividend stocks is an interesting scan because it does specifically filter for stocks who pay an annual dividend of 4% or higher. Dividend stocks, as we discussed in session 2, are often stocks that have greater overall fundamental strength. And so this is a scan that specifically is trying to identify some of those companies that might be worth taking a deeper look into. Remember that not every high dividend yielding stock is going to fit the Rebel Income System. There's a lot of other fundamental criteria that have to be met as well as the value proposition. But this is a good way to start looking for stocks that pay that low hanging fruit that comes from dividend distributions. Bearish extremes is another one, following the idea of looking for stocks that are trading at or near their historical lows. This is a scan that is just specifically looking for bearish momentum score of minus 250. So these are stocks that typically have been in more extended downward trends, may or may not be finding a level of support to begin consolidating from, but may also present some of these early opportunities to take advantage of a potential bullish reversal. Okay. So those are some of the scans that you can use to start to get things rolling. You can also do some things in building some of your own screening tools. There's a lot of other information here. One of the things that I really like about Traders Pro is the ability to create my own watch list. Now, I don't have any here. I've actually removed all of the previous watch lists that I've kept so that I can demonstrate how to create a brand new watch list. The idea here behind a watch list is that it's a lot easier to find your own investing opportunities if you already have a list of stocks that you've built some familiarity with, that you can keep tabs on a day-to-day basis. Not necessarily saying that you're going to be trading all of these or sometimes any of them in the watch list at any given time. But if you've built an extensive enough watch list of at least a couple of dozen to maybe 20, 25 stocks, somewhere in that neighborhood, then you will generally still be able to find useful opportunities to place regular, consistent trades, no matter what your system is, whether it's a value-driven income generation system like Rebel Income, or more of a growth-oriented method. To set up the watch list, we just click on Add New Tab. We need to give it a title. In this case, because I like to focus on put selling, I'm going to call this Put Sale Candidates. Now I need to put in some stocks. I need to actually create my list. Now, if you've got a list of stocks that maybe you've been following on a spreadsheet, you can import them here, clicking the Import CSV file. I don't have one of those in this case, so I'm just going to create one using the tools on the Traders Pro site. So we'll click Add Symbol. Make sure I select the right watch list. If you've created multiple watch lists, you'll see each of those listed here. You can add multiple symbols to your list just by typing in the symbol and then adding a comma. So we'll put in a few here. It's also a good idea to try to identify stocks in a variety of different industries. That way you get a fairly wide distribution of stocks that you may be able to work with. Okay, let's start from there. Excuse me. Make sure that you selected the symbol that you want to include before you type in a new one. You don't need to put in a comma, you can just type in the new symbol. Click Save and you can see that it adds the symbols into my watch list. I can add more symbols at any point just by clicking Add Symbol. These buttons here allow me to either remove it from the list. If I click on plus, then it will add that, give me the opportunity to log a trade through the portfolio tab here. This is a good way. This is not going to place an order directly with your broker, but this is a good way to kind of keep a log of your trades as you go. All right, so that's how to create a watch list. Now, to look at a stock chart for any of these, now all we need to do is click on the stock, and this will give us our Traders Pro chart. These charts are built to try to give you a lot of different information up here in the right-hand corner. Here are the different signals that can be generated at any given time. We can see for Apple, we have a buy signal right now. The information that I've just circled gives you some additional information and data, not only about the stock, but also a little bit of information about the company. This doesn't give you a ton of fundamental information, but there is some interesting information to be aware of. We do see that we get the dividend yield, quick glance at a company's PE ratio, as well as earnings per share. ROE is a fundamental metric that is kind of interesting to get an idea of how effective management is at leveraging the various resources available to it to build shareholder value. We can see volume, the current book value, which is interesting, total market cap of the company, the exchange that they're listed in. More important to the purpose of using these charts are some of the tools that are available within the charts themselves. The buttons right above this chart allow you to make some modifications to the default view that you have. So, for example, I can change through these radio buttons. I can change the time period to different time ranges. I can go to a 3-month chart. You can see this zooms in, gives me a much closer look at a stock's price action over time. Here's 6 months. Here's 1 year. I usually like to look at 1 year, but you can stick to the chart that you feel gives you a better view and understanding of the stock's current price action. You can go out as far as 2 years to really get a sense for what's been happening over a longer period of time. If you want to, you also have the ability to set a custom time period for any stock that you're looking at. So if I wanted to say look at more than 2 years, excuse me, I could go, for example, to let's go from the beginning of January of 2021 to the current date. So we'll go here to May and select 16. Click update. So it'll take a minute to process the amount of time. All right, it's not giving me the full 1 year that I wanted, but what this can do, this can be effective to look back at different periods of time that have passed the 2-year window. So let's switch this. Let's do January 2021 to the end of the year 2021. I'll click update again. And now we get a look at exactly what the stock did from the beginning of 2021 to the end of it. I can switch back to a more current view anytime by clicking one of these time period radio buttons. So if I go to 1 year now, I'm back to my more traditional view. You can also change the way that the price action is displayed. Right now I'm looking at individual candlesticks. So each candlestick here represents 1 day of time. We can also change the view here to include some specific signals. The ST trend stands for short-term trend, and this is designed to identify very near-term points where a stock's trend may be about to reverse. We can see green implies an upward trend, red implies bearish momentum. In the case of an extended bearish drop, you'll see a bearish trend develop. The idea behind these ST trend signals is when you see the color change from green to red, if the stock has been trending up, if we can see, let's suppose you bought Apple at the beginning of January, you've come, let me straighten out this line a little bit, just a moment. Suppose you bought it in January, you've ridden it all the way up here to about 152. You see the stock start to drop and it generates these red signals. Now this may be a good opportunity, this may be a good signal to go ahead and take some profits, sell the stock and maybe look for it to turn back again. If the trend is still going to hold over a longer period of time, what we should see is exactly what happened from February to March, where the stock retraced a little bit. We'll talk more about these kinds of pauses, but once it finds a level to start to hold its current price and then move up again, then we see the color change back to green. So if you bought in January, you could have taken profits in February, avoided a significant portion of this downward turn. Then when you got a new green signal, here's buy, here's sell. And then when we get this new set of green, here's a new buy signal. And then again, you could treat any of these red candles and red signals that come up as new opportunities to sell and take profits as the trend extends itself. So these signals can be useful in that kind of context. The signals indicator changes the view again. It is also designed to try to identify trends, but over a longer period of time. Where the ST trend signal focuses only on bullish or bearish momentum, what this is trying to do is try to identify periods, identify trends that can extend over longer periods of time. Remember, I said that that these periods where the stock has already been rallying, but then pulls back a little bit, if the long-term trend is going to hold is going to extend itself over a longer period of time, then some of these pullbacks, like we see when this color changes to yellow, are really just signs of consolidation. And so as again, you can use these as signals to take profits if you like, or you can take these as signals to hold on and look for the stock to resume the trend that it has been following. On the other hand, if you see something change from green to orange, you can take this as a sign that the stock is starting to lose bullish momentum. That could be consolidation, but then if it breaks down further and gives you a red signal, as we see here, then this is a good indication that now the trend is reversing and we're going to see it possibly extend as it did here from August all the way into the beginning of January. So these are some quick glance signals that we've built into the Traders Pro charts to make some of the other concepts that we're going to be talking about in this session a little bit easier to look at and to analyze. You can also use the buttons along here at the top right to change some of the other settings. One of the settings that I like to look at quite a bit is our Fibonacci trends. So let me go ahead and put these here. Fibonacci trends are trends that are calculated using the stock's using the stock's 52-week high and low. Typically, in most cases, these trends occur over longer periods of time. As with Apple, we can see the peak at 176, the low down here at 124. So this diagonal red line is used to measure the length of that trend. The Fibonacci sequence is then used to try to calculate what are called Fibonacci retracement levels. And that's what we see here on the far right side of the chart. These can be useful for identifying stocks, for identifying potential reversal points within a longer trend, also for identifying levels of support or resistance. You can turn these settings on or off. We can also modify which retracements are shown and even adjust the numbers if we wish. The button that we have here, show or hide the volume bars, will either show volume at the bottom of the chart or hide it depending on what you prefer. If you think it's easier for you to analyze a stock without the volume, then you can go ahead and remove it. If you like seeing volume at the same time to try to identify the strength or weakness of a given signal, when you're talking about buying a stock, for example, seeing a green buying signal from the signals indicator with an increase in buying volume can be a good way to confirm that buying momentum, bullish momentum, is in fact increasing. Okay. I mentioned the Fibonacci trends that you can see here. Let me go back. I apologize. This provides a little bit clearer view of what these Fibonacci trends can do and how they can be used. Now, these different trend lines have historically been proven or seen to identify levels where within a longer trend, the stock may see periods of weakness or possibly signs of strength. And so it isn't that it is not saying that these lines are going to tell you exactly what the stock is going to do around these lines, but they can be used to help you identify where a change might happen. Again, if we're talking about having bought the stock in January, we see the 38.2% retracement line here at about 144. As the stock is approaching this level, one of two things can happen. The stock could hit this line, hit this level, and then drop back down, or it could push above it and go higher. That's what actually happened in February. It actually went higher, and then it continued to go up. This line became useful again just a few weeks later as the stock started to retrace and drop back down again. It found this line again and then used it as a springboard to continue rallying. That's a useful signal, and so the Fibonacci retracement lines can provide you some quick reference views of things like support and resistance. All right. All right, let's talk about pivots for a moment. There's two basic types of pivots. There are pivot lows and pivot highs. You often hear people talk about support or resistance levels. These are very often synonymous with a pivot low in the case of support or a pivot high in the case of resistance. Why do I use these terms? These are terms that are pretty common among technicians, but the basic idea is to try. The basic purpose here is to try to give you a visual cue of what may happen as a stock hits one of these levels. The idea behind all technical analysis is that previous price action can provide clues about what a stock's current price may do in the future. That may happen in the near future or later, but these previous levels can be used to try to identify levels where the stock could either pick up bullish momentum, could pick up bearish momentum. So it could be a source of reversals or continuations at any given time. Identifying these and being aware of them then can help guide some of the decisions that you make about when to place a trade or when not to place a trade. Pivot lows are a simple case where the stock has been dropping. It finds a bottom. In this case, in September, we have a bottom right here around 35.50. The pivot comes when it then turns back and it starts to go back up again. So this is the pivot low. Now, the thing to remember about things like support or resistance, pivot lows, pivot highs, is that the specific price is a lot less important than the general price area. If I wanted to put my line at the absolute bottom of this stock's actual price action at the time, it would line up roughly with 39.42. But the truth is that these support levels can occur in areas of price activity rather than within specific prices. So you'll see me generalize the prices that I'm looking at for these different levels where pivots occur. So a pivot low happens when we see the stock find a new low point, then stop and go back up again. A pivot high is exactly the opposite. You can go back here into August where the stock has been rallying, moving higher. It finds a top where I've drawn my red line. It stops. It hits a ceiling and starts to go back down again. That's a pivot high. Now this is really interesting because not too long after that, the stock had hit a new pivot low at around 42.50. It had started rallying again, but then as it got up here into the $46 range where my red line is, look what happened again. It hit the ceiling and then it started to come back down again. So this is an example of resistance. Pivot highs often prompt short-term reversals to the downside, whereas pivot lows often result in bullish reversals, at least on a temporary basis, to the upside. You can see I've identified multiple of these levels on this chart. Understanding where these are and being able to identify them will help you start to identify where some of these future levels may be. The stock right now is hovering here somewhere between $38 and $39 based on the price action we can see at the end of the chart. So the real question becomes, what do these support and resistance levels, these pivot highs and these pivot lows, mean in terms of what the stock may be doing now? Well, that becomes a really interesting question when you start to try to identify the nearest levels to the stock's current price. What are the historical reversal points in relation to where the stock's current price is? Let's use this bullish pivot low in September and October as a benchmark, as we can draw a line straight across and see that this line is only just a little bit above the stock's current price. This is an example where sometimes previous levels of support can become new levels of resistance. So the idea here is that there is a good chance if the stock starts to rally back up here above 38, pushes up into the 39.50 range, it may find a new level of resistance, turn back and drop back down again. If it does, it's going to form a new pivot high at this point. If it pushes above it, then this level should then become new support and help to to strengthen the idea that the stock could continue to move higher as well. We can then use levels such as the 40-50 level, which is also in line with my 38.2% retracement line, to suggest that it could find some additional resistance pivot from that previous pivot low point. The pivot highs that follow in excuse me, in August and in November and February can be extrapolated to also suggest, if bullish momentum picks up, where might a future top be if the stock really starts to rally? Where might be some useful profit points if the stock starts to really pick up momentum and move above some of these levels that where it's currently trading at? This is another way to demonstrate this idea of previous support, previous resistance acting or providing new support and new resistance. We can see that where the stock broke above, we can see where this level right around $42 roughly provided support for the stock in August. Let me get my drawing tool again, I apologize. Change my color to make this a little bit easier to see. See where the stock used this level as support on a couple of different occasions. In August, again in September. Then as the stock continued its price movement over time, we saw the stock eventually start to come down and drop. It broke down as it started to pick up bearish momentum in March. We saw this stock, WFC in this case, start to approach this line where it should then, based on the fact that it previously found support, should find new support right around here. Instead, it broke down. When it breaks below a previous level of support, that previous level should become new resistance. Sometimes you'll see that resistance appear right away. Sometimes you'll see the stock continue to drop as WFC did, and eventually, over a little bit longer period of time, if it comes back and starts to rally as it did in April here, starts to approach this $42 level, it again begins to act as a new level of resistance. This was previous support becoming new resistance. We had a similar kind of action happening in reverse form based on these pivot highs that occurred in August and September. We can see these reversal points where the stock hit the ceiling, came back down, hit the ceiling, came back down. In October and November, as the stock was rallying, the expectation should have been that the stock would find new resistance at this point and go back down. Instead, it pushed above it, which now implied that this level of previous resistance should become new support. That's why I recolored my line green. We can see here in mid-November, it did in fact provide that support, give the stock a little bit more life through the end of the month and into December. The beginning of December, bearish momentum started to pick up, and as it started to drop, now this should have provided support. Okay, so this new support, however, did not hold. The stock continued to break down. So now it should act as a resistance point, whether in the near term or somewhere in the future. Stock dropped, started to pick up momentum in January again, began to approach this line all over again. And again, we would have anticipated some resistance at this level around 42. It broke above that, then used this same level as new support in late February. Was able to rally a little bit, Then it broke back down below it again. Now it's now it is again a resistance level for the stock as well. So these levels of historical support or resistance, based on where we can identify pivot highs and lows, can often provide clues about what a stock's price action may do, depending on whether the stock bounces off of that level or whether it breaks through it. A breakthrough often implies that the trend may continue to follow the level of the break. A bounce, on the other hand, usually implies that momentum is shifting back in the opposite direction of the most recent momentum. Pivots can also be used to identify trends. The basic idea behind a trend is that you're going to see a fairly consistent pattern, and stocks don't go only up in a bullish trend, and they don't only go down in a bearish trend. You will see rallies and counter moves against those trends throughout. My chart is of Apple again. And let's go ahead and use this bullish trend that has happened since January as an example. The stock saw a lot of momentum all the way into early February, but eventually a lot of the buyers that had been enjoying this nice little run up decided to start taking profits. When they did, the stock started to go down. This is going to happen in any trend, no matter how strong it looks or how long it's been going, short term, long term, or intermediate term. You're going to see these stocks will start to move in a counter direction against the longer trend that we have. Now, this is where seeing a new pivot occur can be useful, because in the case of early March, where we see a pivot low, we see the stock start to rally again and move higher. It finds resistance right up here around this February peak, a little bit around possibly 142, and then it starts to drop back. However, instead of falling all the way down to 144, where it had previously found support, it found a new higher pivot low point at 148, and then it started to reverse again. That gave it enough momentum to push above 154, rally to 160 before it started to go down again. Now, not only do we have 2 increasing pivot lows, we also have 2 rising pivot highs. We see a new pivot low. This will be the third pivot low. Apologize for my terrible writing. At around 156, the stock rallies again, and here's the third pivot high. So it falls back. It finds this previous break of this pivot high level as new support at around 160, giving us pivot low number 4. That rallies up to about 168.50 to give us pivot high number 4. And then we have pivot low 5 here around 164 that occurs in late April and gives the stock momentum to continue moving, as we can see towards the end of the chart, up above the 170 range. So this pattern of rising pivot lows and rising pivot highs is what forms the basis of a strong upward trend. The longer and the more of these, there's not a set number of these pivot highs or pivot lows that you need to look for, but the more of them that you see occur, the more strength that the trend will have. You can also think of the same pattern as kind of a stair step. Let me clear out my my drawings for a moment and change my color again. You can think of these as a stair step. Stock is going up, comes down, okay, finds support, boom, boom, boom. Here's higher lows, higher highs, and what we get is a pattern that looks a little bit like climbing stairs. That's why you'll you'll hear some technicians, myself included, sometimes refer to trends as stair step patterns. Bearish trends work in essentially the same fashion, but instead of looking for rising pivot highs or rising pivot lows, we're looking for exactly the opposite. So here we have a pivot high. We'll mark this as pivot high number 1. Here's pivot low number 1, where the stock comes down, finds a level of support, comes back up again. Pivot low number 1. Now it finds new resistance below the previous pivot high. So this is pivot high number 2. Breaks down below this previous pivot low and finds its next pivot low here at around 154 again. Rallies momentarily to pivot high number 3. Finds pivot low number 3 here, comes to this one, and again extends the downward trend as this pattern of declining highs and lows continues. Again, remember the stair step pattern. We will see these with downward trends just as we do with upward trends. There's low, high, low, high, low, high, low, high. So again, looking something like a stair-step pattern. The trends in the case of Apple are fairly dramatic. They cover fairly short periods of time, which is why the stair-step pattern is maybe looks a little bit more strange. You'll also see stocks extend into more gradual trends that cover longer periods of time, and so these reversals, these patterns of rising or declining pivot highs and pivot lows will create a more obvious stair-step pattern. But these can be a good way to identify opportunities to place trades within a trend. In the case of bullish trends, a lot of momentum-based traders like to look for, if they want to be very aggressive, they will use bounces off of a pivot low like this one as a buying opportunity on the expectation that the stock's trend should push it above its last resistance point and give it some momentum to continue moving higher. More conservative traders will actually use the break as the signal to place a buying trade or a bullish trade. How do all these fit into Rebel Income? The purpose of Rebel Income is to try to identify stocks in generally trading at or near historical lows, but understanding and recognizing where these pivot lows occur, especially in declining trends, gives us opportunities to look for points where the stock may be beginning to pick up a new wave of bullish momentum, such as here, or at the bottom of this trend in January as the stock started to rally. You see bullish momentum starting to shift based on these patterns of rising pivot lows, rising pivot highs, or starting to shift in bearish fashion with declining pivot highs or pivot lows, can give us an idea of whether or not risk may be increasing in the near term for stocks momentum, or whether or not it may be working in our favor for a certain trade we want to make, including for Rebel Income. Okay. Talked about Fibonacci trends already, but these have, as I mentioned, these have proven to be able to identify some of these levels of support and resistance within trends on a fairly consistent basis. I've got a chart here for Kellogg cereal company that showing some. We've got our Fibonacci line from the peak at 77 to the low at around 64. That defines the downward trend that the stock followed from the end of October through the middle of March. That also then gave us the basis for the lines that are drawn on the right side of the chart for the 38.2, 50%, 61.8, and 88.6% retracement lines. These are the default lines. You can, as I mentioned, as I demonstrated earlier, change these to include other time periods or different ratios. But these are generally considered the default Fibonacci ratio levels. When a stock has reversed bearish momentum to bullish, or bearish or bullish to bearish for that matter, very often if the stock has reversed a long-term trend, its first really significant point of resistance will come at around the 38.2 retracement line. We can see that happened as the stock rallied from March into the early part of April. It hit this peak just a little bit below 69, and then it dropped back down again. It found a new pivot low at around 67 and then used that as the basis to reverse again. As it approached the 38.2% line, again, this provided an important visual cue. This is not predicting what is going to happen in the trend, but it does give us a signal line to watch. If the stock breaks above this line, then that should imply that it should continue to move up. If it breaks down again below it, then this confirms this $69 level as resistance and implies that the stock is going to be more likely to drop back and could possibly revisit some of its previous lows. In this case, it continued to push higher. It went up above the 50% retracement line and actually touched resistance at around 72.01 before coming back and kind of settling somewhere between 70 and about $71 per share as of the end of this chart. But all of these lines provide ways to confirm what's happening. This also gives us a good way to see where some of the next levels of resistance. If I'm thinking about what I might be able to do with Kellogg, and I'm trying to think about what kind of near-term upside there may be in the stock with it at $71 right now, I should expect if it breaks above this, it's going to have some fairly limited upside, at least in the near term, to about 72 before it finds a new likely peak. Not guarantee, but again, if I'm trying to predict and anticipate where it might find some levels of resistance, these give me a good way to try to identify that. Okay. Within any different trend, I mentioned that trends occur in different periods of time. It's important to understand how these time periods work because of the way that they can contribute or increase the likelihood of reversals of momentum in bearish or bullish fashion. The first trend to keep in mind is a short-term trend. These trends typically last anywhere from 2 weeks to 3 months in time. We can see in the case of BWA that the stock had been started to establish a very clear stair-step pattern. 1, 2, 3, 4, 5, 6. Started to build nice momentum in this upward trend. By the time it peaked in mid-November, we're at about a 6-week time frame, and at that point it started to, we have a very clear upward trend. This is pretty aggressive in terms of its size and its slope. But at that point it started to retrace a little bit. But if we consider the overall length of the trend over the period from October to December, roughly this 3-month time period, then this overall trend is still moving up. We can connect the low where the trend started in October to this low in December and see that the stock was still generally moving up. So this defined a short-term trend in an upward fashion. Understanding that we're in that the stock was now in a short-term upward trend, then started to, as the stock started to rally again, it found this low at around $39 and started to rally. As it approached this previous peak, now we can look and we realize that now the stock is starting to extend into an intermediate period of time between 3 to 9 months, from October to the end of December and into the beginning of January. We're now looking at a time period 1, 2, 3, 4 months. Now that means that if the stock can then break above this previous level of resistance, this becomes another signal point where the stock is likely to continue to extend this upward trend into an even longer period of time. We can see that that happened in January. It continued its stair-step pattern over the course of the next couple of months. From October to February, then, this is covering a time period of about 5 months. So this is a good example of a strong intermediate upward trend. Now, this is also where we start to recognize that all trends are finite, and inevitably, no matter how long a trend has lasted, it becomes there becomes a greater risk of seeing a reversal. It is not a given that all trends go from short term to intermediate term to long term. Trend reversals can come at any point in time. That's why recognizing these pivot highs and lows as they occur become important within an upward trend, because you don't want to be caught, generally speaking, at the very top, holding the bag when the stock starts to pick up bearish momentum. We can see the stock peak at 51, begin to drop again. This prior level of support at around 49.50 became really important because it failed to hold up. And this break below this level of support then provided a signal that this intermediate trend was in danger of reversing. And in fact, that what we then see is the formation of a short-term downward trend based on these lines. So we can use these trends, the time they cover, and the pivots and levels of support and resistance that occur within them to try to identify points where a stock's trend could be likely to reverse, or it could be likely to continue. If you see a break above resistance in an upward trend, then it's going to be likely to continue. Drops below support in an upward trend could be signals that that trend is about to reverse. For bearish trends, the opposite is true. A break above resistance in those cases is often a sign that a bullish reversal could be happening. A drop below support in a bearish trend is usually a confirmation of the downward trend. It implies that the downward momentum that the stock has been seeing is likely to continue to see that same kind of movement. Once a trend has extended itself past the 9-month mark, we start to refer to it as a long-term trend. I've changed to a different stock here. This is Campbell Soup. We can see its upward trend very clearly extending all the way from the middle of March of last year to this most recent low around 56.50. There's a lot of variance between highs and lows, and pivot highs and pivot lows within this overall trend, but we can see that the longer pattern of the trend is clearly up over this same period. And that means that there is a much higher chance that if the stock can break above this $57.80, $58 level, that the upward trend can continue even more. But now that it's consolidating, and we're starting to see this is also fairly typical within longer term trends, there becomes a point where the bullish momentum begins to slow and flatten out. And when that happens, we start to see this consolidation pattern marked by shorter term pivot highs and lows. This is a sign that bullish momentum is fading, and this could be a sign that the stock is at increased risk of a bearish reversal. But a break, until we see it actually break below these trend lines, generate an actual signal for us that a trend reversal is happening, we don't really know that that's what's going to happen. Okay, we've talked a little bit about trend reversals, but I want to show you some other examples. This is a really good example of how bullish trend reversals work. For Terex, TEX is the stock symbol. We can see the stock hit support at around 37.15, dropped back, found a pivot low at around 29.24, started to rally, found a new pivot high, faded back, found a new pivot low point. Now this is pivot low 1, pivot low 2, rising pivots. Then it breaks above this level, drops back, and now uses this same level as new support. So then this becomes pivot low number 3. It rallies up to this previous pivot high at around 37. This becomes really important. This is why I've extended this red line across, because everything that we are seeing from September through October represents a very, very short period of time, of a short rally in a bullish fashion. If this is going to extend from a short-term trend into an intermediate trend, it has to break above this level of resistance. It was able to do that in this case, and it extended and rallied all the way up before peaking again a little bit above 45, where my new red line occurs. Now, eventually it does fade back a little bit into December, but it finds this new level of support. We'll mark this as number 4 at around $42 roughly. Rallies, finds it's coming up on this previous pivot high again, previous resistance, breaks above it to identify an opportunity where a trend continuation will come. So where did the reversal, where is the reversal really confirmed? It isn't in this period. It isn't when the short-term trend starts to show some strength out of the previous trend bottom. It's when, I'm going to change the color of my pen. The signal point of the trend reversal comes when the stock breaks above this previous resistance. This is a very, very good example of a bullish trend reversal that happened in November. This is a good way to recognize and identify when a stock is actually building enough bullish momentum to be able to sustain its rally over a longer period of time. So look for a break like this above a previous level of resistance as a strong sign that a trend is about to reverse in a bullish fashion. We can do the same kind of analysis on the bearish side. I've gone back to WFC to try to identify a couple of different points where the stock's bullish trend reversed. So, change my pen color again. In November, we can see that excuse me. I apologize. We can see the stock building momentum through October and November to this peak at around $48. It then falls back, finds a pivot low point at about 45.75 roughly, rallies again, finds a new level of resistance, and then as it fades again, starts to pick up momentum, it starts to approach this 45.74. I've extended my green line here because again, this becomes the signal point. All of this activity is not the signal that the trend is about to reverse. This is a period of consolidation where the previous upward trend has its bullish momentum has begun to fade, but the actual signal point for this actual trend reversal comes with the break below this prior pivot low. This becomes an important level to recognize to keep from being in the stock through a potentially much longer term downward trend. We see the same thing happen just a little bit later. The stock eventually bottoms in December, picks up bullish momentum again into the beginning of February when it hits the high at around $49, starts to fade back. It finds a pivot low, a new stabilization point, again, using the same 45.74. Remember, prior support? Sometimes it also provides prior support, and that's what happened here. Hit a new pivot high at around 47, started to come back down again. Again, it acted as support one more time. Again, we have a lot of chop, a lot of consolidation here. This is not the signal. This is a sign that we do have now a pattern of declining highs, but we don't have a pattern of declining lows yet. So the signal that the trend is about to reverse in bearish fashion, just like it did in December, comes from the break below this major support point. This is the signal. This is a good indication that this trend is about to reverse in a strongly bearish fashion. I hope this has been useful. These are ways that we can recognize when trends can shift and change their direction in a significant way. These are not necessarily requirements for Rebel Income trades. You will see me place trades with stocks that are at the bottom of downward trends that are not necessarily giving a bullish reversal signal, but may be locked into one of these consolidation periods. And those are okay too for our purposes, as long as the value proposition is there, as long as the fundamentals are solid. But this does give you an idea, if you are going to place the same trade, this can give you an idea of whether or not you're going to need to be willing to possibly endure additional downside in the stock, as I am often willing to do, for the simple purpose that the stock pays a nice dividend, and that I believe it should be worth more than it is today. These do give us a different way to look at the price action, put it into a broader perspective, and think about whether or not these are risks that you're willing to incur, and if so, how you might want to think about managing the trade as you move forward. All right. Next time in session 4, we're going to really start to dive into options. And we're going to start to cover some of the basic terminology and concepts that you need to be familiar with in order to use options in a practical sense, not only for the Rebel income system, but also for any kind of an option trade. So we will talk about call options, put options, why you use one versus the other, what strike prices mean, and how and what the implication of the different strike prices that you can choose may have on the trades that you're placing. What is a premium? What does that mean to the buyer? What does it mean to the seller of options? We'll talk about some other important terms like at the money, in the money, and out of the money, what those mean, and how we try to use an understanding of those terms in the context of the Rebel income system, and talk about options expiration. Unlike stocks, which are generally always available in the marketplace, options have a finite lifespan. So we have to understand how much time to expiration an option has. We'll spend some time defining these terms. Hope you found this useful. Thanks for your time and your attention, and looking forward to seeing you in our next session.